Okay, good morning everyone. So welcome to Fundamentals of Accountancy, Business and Management 2. So our topic for today is all about bank reconciliation statements. So this is Teacher Marcelina D. Malaza, Senior High School Teacher 2. Okay, welcome to our class. Once again, our topic is all about bank reconciliation statement. Do you have any idea about bank reconciliation statement? So, our class objectives and rules are the following. To know what is reconciliation statement. Our objective is to prepare a bank reconciliation statement. And our rules, stay focused on our discussion. Take important notes. Send me your message if you have any question. My messenger is open. Okay. We will have a brief discussion regarding to our topic. So a bank statement is a monthly report provided by a bank to a depositor which shows the following information: beginning of the month cash balance, total deposits made by the depositor, and other bank credits during the month, total checks paid by the bank and other bank charge during the month, and of the month cash balance. So within that month, there is what is called bank statement. So ano yung in and out mo ng pera mo doon sa bangko ay meron niyang nakatali or nakalista sa bangko. So that is bank statement. Like for example, you are asking a bank statement for the month of July. So, halimbawa, sa July, meron kang na-deposit last June. So, yung balance as of the end of June will be forwarded to beginning of July. So, that will be the beginning of month cash balance. Okay. And then, the total deposit made during that month. Okay, yung in and out ng pera mo sa bangko ay nandun sa bank statement. Let's understand the topic deeper. Okay, so concept and definition. Bank reconciliation statement is a report which compares the bank balance as per company's accounting records with the balance stated in the bank statement. So, report which compares the bank balance per company's accounting records. So, we will kukumpara natin yung bank balance and company's accounting record. If meron bang mga discrepancy or meron bang mga mali or hindi ba sila balance. Meron bang nag-in, nag-out na hindi na record sa bank. Okay. Then, the difference between these figures is the reason why companies prepare a bank reconciliation statement. The difference between these figures is the reason why companies prepare a bank reconciliation statement. So, if there is a discrepancy, merong hindi nagkakasundo or merong hindi tama. Like for example, na i-record sa bank na merong nag-withdraw and then hindi na i-report sa company yung withdrawal na ginawa na yon. So, sa bagay na yon, gagawa tayo ng bank reconciliation statement. Okay? So, it is normal for a company's bank balance as per accounting records to differ from the balance as per bank statement. Nakuha nyo? It is normal for a company's bank balance as per accounting records to differ from the balance as per bank statement. Normal lang daw yan. Titingnan natin kung saan magiging hindi balanse or kung saan na-record ng bangko at hindi na-record ng company or na-record ng company na hindi na-record ng bangko. Okay, look at these examples. Kung kailan siya hindi ma-record ng bangko at hindi na-record ng company. Time lags. Okay, this is the first one. Time lags. What is a time lags? Time lags that prevent one of the parties, company or the bank or any party, from recording the transaction in the same period as the other party. Like for example, a bank statement that ends January 30, 2015, and then the company was able to collect cash of 20,000 at 5 p.m. Okay, take note, 5 p.m. January 30, 2015, the company collected 20,000 pesos. Bank usually closes at 3 p.m. Diba? Kadalasan, karamihan ng mga bangko ay nagka-close ng 3 p.m. Because of this, the cash collected will not be reflected in the bank deposit, but it is, however, recorded in accounting records of the company. Okay, naintindihan nyo ba? Or nakuha nyo? So, let's say like this. January 30, 2015 at 5 p.m. nakatanggap ang company ng 20,000 pesos. So, na-record ni company ang 20,000 pesos na na-receive niya. But, however, hindi na ito maaaring i-deposit sa bangko dahil it is closed na. Closed na yung bangko by 3 p.m. So, ang nangyayari dito, yung money na record sa company ng January 30. But, sa bangko ay na-record siya ng January 31, 2015. Okay, nakuha nyo? So, hindi same day ang recording ng company at ang recording ng bangko. Okay? So, in this one, errors. Errors by either party in recording transactions. Example, a check was issued to Meralco by the company amounting to 1,000 pesos. The company recorded this as 100. When the check was presented, the bank paid Meralco 1,000 pesos. In the record of the company, it was only 100, while in the records of the bank, it's 1,000. So, there is, in this case, an error that will cause the difference between the bank record and the company's record. Okay? So, we are human. Nagkakamali tayo. So, ito na yung sinasabi natin na may malaking diferensya or may malaking halaga yung zero sa accounting. Tingnan natin to. Diba? Yung 1,000 nagiging 100 or vice versa, yung 100 magiging 1,000 dahil sa isang zero lang yan. So, that is error. Isa rin yung paraan or dahilan kung bakit gagawa tayo ng bank reconciliation statement. Okay. Okay, let's discuss and analyze together the importance of bank reconciliation statement. So, monthly preparation of bank reconciliation assists in the regular monitoring of cash flows of a business. So, it is important to monitor, it is important to record the bank reconciliation so that we can monitor the cash flow of our business. And preparation of bank reconciliation helps in the identification of errors in the accounting records of the company or the bank. If you have a record or if you have a bank reconciliation, then it is very easy to identify if there is a discrepancy in the record or there is an error in the accounting records of the company or the bank. If the bank balance appearing in the accounting records can be confirmed to be correct by comparing it with the bank statement balance, it provides added comfort that the bank transactions have been recorded correctly in the company's record. And then, cash is the most vulnerable asset of an entity. What is vulnerable? Delicate, no? Napaka-delikado or importante, napakahalaga na asset of an entity. Bank reconciliations provide the necessary control mechanism to help protect the valuable resources through uncovering irregularities such as unauthorized bank withdrawals. However, in order for the control process to work effectively, it is necessary to segregate the duties of persons responsible for accounting and authorizing of bank transactions and those responsible for preparing and monitoring a bank reconciliation statement. So, dapat ibang tao. Like for example, iba yung employee number 1. Siya yung nagre-record ng mga transactions, business transactions. Employee number 2, siya yung gagawa ng withdrawals and deposits. And employee number 3, siya yung magre-record sa book of records sa company. And then, another person na rin yung magre-record sa or magmo-monitor sa bank reconciliation statement. So, kumbaga, iba't ibang tao ang nagmo-monitor. Kasi, pag isang tao lang siya, so may malaking posibilidad na ma-manipulate niya or kumbaga gagawa siya ng kunting sasabihin na lang natin na kasinungalingan dahil maaari niyang i-manipulate yung recording kasi siya na rin yung magwi-withdraw, siya na rin yung mag-deposit ng cash at siya na rin yung mag-re-record ng mga transactions. So, dapat sa iyong negosyo ay mag-a-assign ka ng ibang tao na gagawa sa iba't ibang recording. And then, do you have any questions so far? Any question? Any clarification? You can chat me or you can comment down. Let's continue. Okay, we will try and learn. So this is our activity. So Juan Company Bank Reconciliation Statement is of April 30, 2021. So unadjusted book balance. So this is the format. Bank debit memo, NSF check, non-sufficient fund, printing charges, bank credit memo, collection, errors, adjusted book balance, unadjusted bank balance, deposits and transit, outstanding checks, and adjusted book balance. So let us discuss this further. Look at this illustration. Okay, or we will explain further what is deposit in transit, what is NSF, in order for you to know or to learn what are those things. Deposits in transit are amount already received and recorded by the company but are not yet recorded by the bank. Again, deposits in transit are amount already received and recorded by the company but are not yet recorded by the bank. For example, a retail store deposits its cash receipts on August 31 into the bank's night depository at 10 p.m. On August 31, the bank will process this deposit in the morning of September 1. So the company deposited it at August 31 at 10 p.m. However, the bank will process this deposit on the morning of September 21. Why? Kasi close na yung bangko. Okay, as of August 31, the bank statement date. This is a deposit in transit because deposits in transit are already included in the company's cash account. There is no need to adjust the company's record. However, deposits in transit are not yet on the bank statement. Therefore, they need to be listed on the bank reconciliation as an increase to the balance per bank to report the true amount of cash. Okay? So, wrap up. Deposit in transit. An account or an amount recorded by the company but not yet recorded by the bank because it is deposited, it is already deposited while the bank is already closed or the bank record is already closed. But still, the bank received that one, but the recording is in the following day or sa susunod na araw. That is deposit in transit. Outstanding checks or checks that have been written and recorded in the company's cash account but have not yet cleared the bank account or presented to the bank by the payee. So that is outstanding checks. Like for example, Company A ay nag-i-issue na ng cheque. So, syempre, na-record na yun sa company na nag-cash out or meron ng certain amount na naibigay si company to a certain payee or a certain client. But the client did not, hindi pa niya na i-cash out yung cheque. Like for example, si company A nagbigay ng cheque. Subalit siguro busy si kliyente or like for example, nagbigay siya ng Biyernes. Tapos Sabado at Linggo, walang open ng bangko. Gustong-gusto ni kliyente na sa bank siya magpapa-encash. Subalit, walang open na bangko. Kaya Monday na nagpa-cash out si kliyente or yung payee. So, yun, na-record na ng company, but however, hindi pa na-present ng payee sa bangko yung cheque niya. So, that is outstanding checks. Okay, checks written during the last few days of the month plus a few older checks are likely to be among the outstanding checks because all checks that have been written are immediately recorded in the company's cash account. There is no need to adjust company's records for the outstanding checks. However, the outstanding checks have not yet reached the bank and the bank statement. Therefore, outstanding checks are listed on the bank reconciliation as a decrease in the balance per bank. Okay? So, cheque na hindi pa na-encash, hindi pa dumating sa bangko. Subalit ito ay nakatala na sa company's record. But not yet in the bank's record kasi hindi pa siya dumating doon. Okay, so here is the illustration of outstanding check. On January 29, 2015, Juan issued a check for Maria amounting to 2,000. The checks were then recorded by Juan in his books as a deduction to his cash. It so happens that the bank was closed on that day and Maria was able to visit the bank and have it in cash on February 1, 2015. In the bank statement received by Juan from his bank ending January 30, 2015, the 2,000 check was not deducted. However, it was already deducted in the books of Juan on January 29, 2015. The 2,000 check is called an outstanding check. Is that clear? Good. Okay, so this is it, the illustration. And then bank service charge are fees deducted from bank statement for the bank's processing of the checking account activity. Example, accepting deposits, posting checks, mailing the bank statements. So may mga charges po iyan. And then NSF or no sufficient fund check is a check that is not honored by the bank of a person or company writing the check or issuing the check because that account did not have a sufficient balance. As a result, the check is returned without being honored or paid. Like for example, nag-i-issue ka ng cheque, nag-i-issue ka ng 500,000, subalit wala kang 500,000. Meron ka lang 100,000 or 200,000. So, that check issued by you is called non-sufficient fund. No sufficient fund check. Wala siyang gaanong or hindi kaya ng kanyang balanse or ng balanse niya sa bangko yung amount na ini-issue mo. So, kumbaga, isa din yang bouncing check. Check printing charges occur when a company arranges for its bank to handle the reordering of its check. The cost of a printed checks will automatically be deducted from company's checking account. So, yung mga cheque na yan, hindi yan basta-basta ibinigay ng bangko sa'yo, kundi may charge yan. Okay? So, interest earned will appear on the bank statement when a bank gives a company's interest on its account balance. The amount is added to the checking account balance and is automatically on the bank statement. Hence, there is no need to adjust the balance per bank statement. Automatic na yung mga interest earned. Like for example, you have a deposit on a certain bank. So, magkaka-earn niya ng interest. So, automatically, it will appear on the bank statement. Interest earned will appear on the bank statement when a bank gives a company interest on its account balance. The amount is added to the checking account balance and is automatically in the bank statement. Hence, there is no need to adjust the balance per bank statement. So, the interest earned is automatically included in the bank statement. Errors in the company's cash account result from the companies entering an incorrect amount, entering a transaction that does not belong in the account, or omitting a transaction that should be in the account. Since the company made these errors, the correction of the error will be either an increase or a decrease to the balance in the cash account on the company's book. Okay. So there are times that merong madi-delete na transactions or may mga transactions na hindi ma-record. So that we call errors in the company's cash account. This is the bank reconciliation process. So step 1, adjusting the balance per bank. The first step is to adjust the balance on the bank statement to the true adjusted or corrected balance. So you can look at the answer or the sample. And then step 2, Adjusting the balance per books, the second step of the bank reconciliation is to adjust the balance in the company's cash account so that it is the true, adjusted, and corrected balance. And step 3, comparing the adjusted balance after adjusting the balance per bank and after adjusting the balance per book. The two adjusted amounts should be equal. If they are not equal, you must repeat the process until the balances are identical. The balances should be true, correct amount of cash as of the date of the bank reconciliation. The adjusted cash balance will appear on the cash in hand, cash in bank in the statement of financial position or the balance sheet. So recap, we must adjust first the balance per bank and then adjust the balance per book and then compare the balance per bank and the balance per book if they are balanced. If they are not, repeat the process of the bank reconciliation. Okay, this is the sample. Okay, recap. What do you understand about our lesson for today? Can you write it in your notebook? Take a picture and send it to me. What is a reconciliation statement? Okay, so in reconciliation statement, it is the adjustment when there is an error in the bank book and the company's book. So the process of reconciliation is adjust the bank book and then bank statement rather, and then second is adjust the book, company's book, and then compare. Afterwards, if they are balanced, then we are good and well. Thank you. Answer your assignment posted in our Google Drive or refer to your printed modules. This is Teacher Marcelina Duarte Malasa saying, stay safe and God bless.